Hi and welcome back to Tip TV. My name's Charlie Burton. Today I'm interviewing independent day trader Viet Dang. Viet, welcome to the show.
Thank you for having me, Charlie.
Viet, we've got to get straight in here. We've got a lot to talk about.
Sure.
Tell us a little bit about your background. Where are you from?
I'm from Australia.
Yeah.
I study physics at the University of Western Australia. And then when I finished that, I started my own business. Came to the UK 3 years ago with the idea of looking to learn a new skill set.
Yep.
Something that allows me to work independently, give me freedom, and I discovered Forex trading.
Right, okay. So, and enjoying the weather obviously as well. This lovely long winter we've been having.
It's always lovely.
Yeah. Actually, you've only been back a few weeks because you've been out in Australia anyway.
Yes, right. I came back to visit my family for a few weeks.
Okay, so you got into trading in 2013. You went on to, was it Baby Pips or whatever to start off with? I'm giving a bit of a plug there to a website, but you learnt the basics by just going onto some websites and
That's
some
right.
forums.
The basic information is out there. When I first started, I didn't know what a pip was, and I'm very, very grateful that as a new trader, you can get a very good foundation for free, without having to invest so much money to start with.
Yeah.
It's a great way to start a career in anything, really, if you can do that.
Yeah, absolutely. The barriers to entry are quite low, aren't they?
Quite low, yes, for a retail trader.
Yeah, exactly. You want to go and be an airline pilot, it's going to cost you 40, 50, 60,000 pounds to go and train. You could train to learn to become a trader for a few £1,000s.
That's right, provided you don't blow your account.
Well, yeah, that's part and parcel of it. You've got to do that the first way around. Okay, so you went and you joined some online forums. So you picked up a lot of techniques and various bits and pieces, and then I assume you've then formulated your own ideas on the back of that.
That's right. I joined an online community, and I learned a trading strategy. After my first 12 months using that strategy, I realized that I'm very bad when it comes to making discretionary decision. For whatever reason it is, I just cannot seem to make the right decision under pressure. So as a way to walk around that problem, Charlie, I realized, well, I can outsource a lot of the simple but critical part of my trading into machines. And if I can do that, I can achieve consistency. So for my second year of trading, that's what I've been doing. Slowly, I have been putting part of my trading into algos, and I use them to help me create and achieve consistency, and also to eliminate the emotional side, which I'm not very good at for whatever reason it is.
Well, you're outsourcing your emotions, aren't you?
That's right.
That's the way to do it.
And it's very cheap.
Okay, you're a physics major anyway, so you've got that sort of mindset. So, I mean, there's a lot of traders out there, myself included, who I'm not a programmer at heart. I've got programmers I've got access to, but for me personally, I can't undertake that. But for you, you can get engrossed in that. And so, okay, so you've got some algos running, and you're trading what markets?
I'm trading purely Forex.
Forex, right? Okay. And you're also trading for a prop firm, aren't you?
Yes, that's right. I'm 2 months away from my first year as trading for a prop firm. And I'm hoping that they like my performance so that they can allocate more capital my way.
Yeah. And so what do you feel the advantages are for you personally of going down that route and trade? Because prop firms are quite difficult to come by these days. And obviously we're not going to mention any names because they don't want to be mentioned on this,
Can I say
show. But for you personally, what was the advantage it's given you?
I look at it from a business perspective because I've had some exposure doing business. To gain a 10% on $50 million is the exact same work it takes to make 10% on 50,000. So in Forex, if you become a proprietary trader, you have the ability to multiply your gains from essentially doing the same thing. And for me to start out as a retail trader, one of the biggest problem is you just don't have enough money to start off with. So you try to save, you try to earn extra money, and I realized that being a proprietary trader allows me to accumulate more profit so that I can add into my own trading account.
And so what you did is you approached that firm because you'd built up you said it was only 6 months, but it was 6 months worth of trading history on live accounts. You presented those live accounts to a number of firms, and one firm got back to you and said, okay, we'll give you an allocation. Let's see how you then get on.
That's right. I remember going to Google and just taking down all the contact details of all the prop firms that I can find, send them emails, postcards, you name it, I've done it, I've called. and one firm, a small private office in Germany, came back with a reply saying, well, come meet us, show us what you can do, and it started from there.
Wow. Okay, so let's talk a little bit about your style then. So although it's an automated approach that you have, I assume you have a given style or types of different styles that approaches you're having.
My trading methodology is very, very simple. I use daily chart to find horizontal support and resistance areas. And I look to buy above support and to sell below resistance.
Right.
That's basically it. No indicators, nothing like that.
Pure price action.
Pure price action. My algos can only ever read candlesticks. It doesn't know anything else.
Yeah. Okay. And so literally, as price is coming up to a prior high, as it's approaching that prior high, your algos might be selling. Because is that what you're saying?
Well, we look to sell if price hits resistance and is not able to break it. So
okay. So your algos are then going to be watching the price as it approaches that zone, and then if it starts to fall down from that zone, that's when it then executes.
Similar to what you described.
Right. Okay. Yeah. I'm just trying to get there with the audience and give us some sort of idea. So that's quite useful to know. And so what do you think about market dynamics though? What about when all of a sudden the market dynamics and cycles change and prices start coming up to prior highs, they break it and then come back off? Then how's your algo going to cope with slightly differing price behavior?
Yeah. Now, I realized that with my algos, I can never be 100% accurate. And it's impossible to be. What I achieve with my algo is positive expectancy over a long period of time. So we know if this is the behavior that the market is demonstrating, there is a possibility that this is going to be an outcome. And we trade it knowing that if that is the case, we make money. If not, we're wrong. And over a long period of time, statistically, we will be making money. So I don't take the approach of trying to predict what the market is doing. Rather, I look for a very particular setup using candlesticks. And if it shows, I will take it with no hesitation, and I let the mathematics work out for itself.
Okay, and so it is still a system approach. So all systems have drawdowns. So at what point do you cut it off, shut it off, so to speak, if it goes into a drawdown? I'm not saying it's necessarily even done it right now in the history you've had, but let's say into the future you have to have some sort of plan. So at what point do you classify a drawdown, and then it extended so far that you actually say, we've got to shut this off?
Right. Very good question, Charlie. The way I do it is this. Once I accumulated 100 trades using the algos, I look at the actual drawdown that I suffer, and I would say, okay, if this is what's happening in the past, I can expect similar performance going into the future. And my cutoff point is actually 50% more than what I have experienced in the past. So for example, if in the past 100 trades we experience 8% drawdown, then going forward into the future, 12% drawdown is the cutoff point. That's the point where we say something is not right. We may not know where the problem is, but something is not quite right. We're seeing a statistical anomaly. So we need to back off and investigate what it is that's happening in the market.
Excellent. Okay. And so on that same theme then, so you're talking about drawdowns. What about tweaks? What about general tweaks that you might have to implement? Because as the market's, in 6 months' time and a year's time from where we are today, they'll be moving around slightly differently, and so the program itself can't surely be static. So do you make little tweaks every so often to the programs?
Well, I trade a market phenomena, price bouncing off support and resistance, and generally over a long period of time, that behavior is very, very consistent. The only discretionary, I would say, element to my trading is where it happens. As you know, support and resistance tends to move over a period of time. My algos, I dedicate the simplest execution to them. I have complete control over them. So if market is behaving in a way that statistically is abnormal, I have the option to either stop trading or I would manage the trades that the algos take. So I have that option to go in to make some discretionary decision. But of course, I have to stick within my parameters and just can't overrun the algos altogether because it has its job, I have my job, we stick to the parts that we need to play.
I must say, considering you've been trading 3 years, roughly, you're talking like a seasoned pro. It's really fascinating.
Oh, thank you, Charlie.
It's really fascinating talking to you because you've built up a lot of experience and you talk like someone who's been around for 10 years plus and you've had a lot of experiences. And obviously, I know that you had your losses in you when you first started. You recognised that and you decided that emotional or discretionary type trading, full discretionary trading, wasn't right for you because of the emotional side. So you've parked some of that so that you can outsource the emotions, like we said. But where you are now, you seem like you're a seasoned pro and you're practically there. I'm trying to get some bits out of you to say, okay, what if this happens? But you seem to have an answer. I'll tell you what we're going to do.
Sure.
I'd like to get you back in the nearish future, maybe in 3 months' time, to come back onto Tip TV if you would, and see where you are right there. Because at that point, because I think that you've got a good history at the moment, but it's only a short history.
That's
I'd like
right.
to see where you are in another 3 months and see how much money you're managing at that point. So
I would love to.
Brilliant.
I'd love to be back.
Viet, thanks ever so much for coming on the show. We're out of time already.
Thank you very much for having me, Charlie.
That's all from me. It's Charlie Burton signing you off. Over and out.